All information contained in this podcast is general in nature and does not consider your individual circumstances. You should consider the appropriateness of this information with regards to your individual objectives, financial situation, and needs. Welcome to Sharing More Than the Sheets, a podcast to help you and your partner make better financial and lifestyle decisions so that you can both focus on the things that you love. I'm your host, Michael Curry, financial planner, green thumb, husband, and just dad. This segment is called Michael's Magic Moment. It's my opportunity to play a little snippet from one of our previous episodes, which resonated with our listeners, that I received feedback from, or I felt really had an impact on some people's lives. Hope you enjoy it. So I go back to an episode from 2023, where I talk about market fluctuations. Now, at the time of recording it, I vaguely remember what happened in the market, and I remember it was a very topical episode, and I got a lot of good feedback about it. And it's really interesting to see 2 years later how it's still relevant, and I think it always will be relevant. In this episode, I talk about some emotional strategies and some financial strategies on how to deal with market fluctuations. Now, if you haven't really invested much money before, it's very easy to say, oh, if the market goes down, I'll be tough, I'll be fine, I'll invest more, I'll make the most of it, I'll ride it out. But when it actually happens to you, it's completely different, because when you've actually got money on the line, markets go down, or the opposite, markets go up. How we react to that at the time is very different to how we think we're going to react to it, or maybe how we'll feel at the time. Can't be imagined until it actually happens to you. Because as humans, we make decisions based off emotion. I've said this so many times before, we're very emotional creatures. We act in fear, we act in excitement, we act in love, we act in hate, we act in envy. We do things, like how we feel affects our actions. Now, if you're an investor, hopefully you have someone in your ear, and hopefully they're a qualified financial advisor who can actually talk to you through these situations and help you deal with things. Now, we don't have crystal balls as financial planners, but we can help someone understand the advantages and disadvantages of making certain decisions and the pros and cons of acting in certain ways. And that can hopefully help people make smarter, informed decisions. I hope this episode helps you, and I hope you take something out of it. And moving forward, all I can say is think about these things. Think about these points that we're discussing, or that I'm discussing, next time you're dealing with a market fluctuation, so that you can deal with it better to make better decisions for you and your family. First of all, this applies to any situation, but especially when there's market volatility, it's so important to review your financial plan. So the plan that you're following, the strategy that you're following, it's so important to review that, just to make sure that things are still on track the way they should be, things are set up the way they should be. If there are any contingency plans that you've planned from day one, should they potentially be looked at the moment? If markets were to drop, for example, would this severely affect any short to medium term goals? Because sometimes if, for example, you've got money that you've invested and there are market fluctuations and you potentially need that money very soon, you're going to be treating your investments very differently compared to if this investment, for example, was for something a lot more long term. The other thing as well is just to make sure that you're still following the plan. Again, this is something you should be doing regularly, but especially when markets are fluctuating, understanding exactly what your position is and knowing whether you are on track and you are following the initial strategy that you set out is more important than ever, because this is where mistakes really, really show. The second thing you can really do is increase your emergency fund. Now, whether you've got much invested or not, when there are market fluctuations and things get ugly, cash, having liquidity can really make things so much easier for you. So having enough funds in an emergency, or just increasing it, just essentially gives you that war chest. It gives you opportunity and it gives you options. Now, whether it's A, to survive if things get really ugly, or B, to maybe capitalize on potential opportunities that might come up. The other thing is to reassess your risk tolerance level. So anyone that's seen a financial advisor would have most likely gone through a risk tolerance questionnaire. And normally, understanding the level of risk that you're willing to tolerate is comprised of a discussion, answering several questions, looking at graphs, looking at different asset allocations, and essentially having a discussion with your financial advisor. And the whole purpose of this is to work out how much risk are you willing to tolerate and how much risk can your financial situation tolerate. To some people, it's high risk. To some, it's conservative. To others, it's balanced or even in between. But it's really important to reassess your risk tolerance level, not just regularly, but especially when things are fluctuating, especially if you haven't really looked at your investments in a while, knowing that there is a possibility that, for example, your risk tolerance level at the moment could be down here, but your money's invested up here, So even just knowing that can make a really big difference, because sometimes it could really avoid surprises, or it can avoid you being in a particular financial situation where things are just really, really tight. The other thing is to make sure that your portfolio is properly diversified. Now, this is something you should have been doing anyway, but just making sure that you've got that diversification in place, it spreads that risk across your investments, whether it's in different asset classes or different types of investments or different types of assets. Just having that diversification just means that if fluctuations are happening, or they can happen, which they always can in the future, just knowing that you've managed that risk in the best possible way. And there is no best possible way. No one has a crystal ball, but just knowing that you've put things in place like diversifying your investments, it just minimizes the risk of you being one of the losers when markets are fluctuating, or if markets don't perform as well as you expected them to. Because again, you want to be a winner. And diversification is a way of mitigating risk. And it's a way of making sure that you are increasing your chances of managing market fluctuations. And lastly, one of the most important things you can do is talk to a financial advisor. And the reason I say this is just to assess the points I've just talked about. Making sure you have enough diversification, reviewing your risk profile, looking at your investments, making sure that you're on track to your plan that you set. There are so many times, I saw a client recently actually, where they had seen a financial advisor years ago and they were very happy and they felt everything was set up the way it should be. And they came to me just off the recommendation of their son. And looking at the situation, we found that their investment, their risk level was down here. They admitted to me that they don't have long until retirement, and they didn't want to take on too much risk, which is understandable, especially with the time frame that they had. Plus, they didn't really have many other investments apart from their super. So they really wanted to make sure that, if something was to happen in the market, they were just being extra careful. And especially because they had almost achieved their retirement goal as well. But I found that they were way over invested. They were actually in high risk. And when I told them that the wife had remembered, but the husband completely forgot, and he just assumed that it was okay. And just having that discussion and just being able to give them that advice just meant that they were now invested in line with their risk profile, in line with what they're comfortable with. And soon after that, there were some pretty serious fluctuations in the market. And they were very, very glad that they reviewed all that. Sometimes it could be just having a chat to your advisor, if you have an advisor, and just, I guess, having a bit of I like to call it a reality check. But so many times as investors, we get scared, especially when markets are fluctuating. And we need that person sometimes to be like, hold on a second. Let's go back to the plan. Let's go back to the strategy. We have contingencies for this. It's all going to be okay. Compared to someone that obviously doesn't have that person to talk to, and they make irrational decisions, because that happens all the time. Because I've said this in many previous episodes, but we are irrational human beings that make irrational decisions every single day. We do what we think is best, but we don't think rationally about so many things. Investing is exactly the same. Some are worse than others, some are better than others. But it's very important to make sure that you have someone there. Overall, market fluctuations are part of investing. Sometimes they're small, sometimes they're significant. But if you can manage it properly and if you can deal with it and have strategies in place to deal with it, you'll hopefully increase your chances of ending up on top, being a winner and not a loser, taking advantage of the market fluctuations, potentially, and not being a victim of it. Thanks for joining us on Sharing More Than the Sheets. Please make sure you subscribe to be updated with future episode releases, and feel free to share this episode with any friends or family that you think it might benefit. Please visit us at sharingmorethanthesheets.com.au to submit questions or requests for future podcast topics. These podcasts have been brought to you by Better Financial Planning Australia. To book a 15-minute phone chat, visit betterfinancialplanning.com.au.